It's Kira from Loans Canada. I'm here with Dave Johnson, mortgage broker with Lendmore Financial. Dave, could you introduce yourself a little bit?
Yeah, thank you. Thank you. So my name is Dave Johnson. I'm a mortgage broker with Lendmore Financial. We are a boutique team of mortgage agents and brokers that focus on finding solutions for clients in Ontario.
So for those who might not know, could you tell us a bit about the benefits of using a mortgage broker?
Well, the key role and the benefits of using a mortgage broker is just someone to listen to what you're trying to get done, and someone that's going to go out into the marketplace and shop for the best solution for you based on your particular specific circumstance.
Right. So it's kind of like having an expert on your team.
That's right. You're absolutely right.
Awesome. And so for those with lower credit, how could a mortgage broker help someone on the subprime side purchase a home?
Well, the idea is we're going to first review the credit. We're going to see what are the issues and how can we fix those issues. And we're going to ensure that whatever solution we put in place is reflective of the current credit and the future credit of the credit getting better. So we're going to base it on not only the credit, we're going to look at income, we're going to look at availability of down payment, and we're also going to base the decision on the property as well. So that's how we help individuals with low credit score achieve home ownership, because we're not just focused solely on credit.
And so for those who are looking to refinance their mortgage, what kind of role would you as a mortgage broker play in that process?
We're going to look at their specific circumstance, and we're going to help match what their need is or their want with was what they want to achieve in terms of a refinance. Not everyone has a high credit score. Not everyone has a low credit score. Not everyone is employed. Not everyone works a 9 to 5. There are various different borrowers that have different income types. So we're going to take their income type and their credit and match them with a lender that is more suited for what they need to get done.
So the idea is really like a fully personalized process in a way that someone couldn't get on their own, I suppose, if they were just looking and going straight to the bank.
That's the idea. So if someone was to go to a bank, which is always a good option, but let's say they go to one bank, that one bank is going to have one solution. And if they're declined, then they'll have to go to another institution or lender and pull their credit multiple times. The main thing with a broker is that we'll pull the credit one time, and we'll use that score or profile to shop the marketplace with many different lenders and see if we can find a low rate or low cost of borrowing solution for what they're trying to achieve.
And getting back into the refinancing area, so when would you recommend a home equity line of credit over a refinance? In what types of situations?
A HELOC, which is a home equity line of credit, and a refinance both serve a purpose. You're accessing equity or funds from your home to achieve some type of need. Now, if you're locked into a mortgage term, there's a penalty to break the mortgage term. So a HELOC would be a cost-effective way to obtain the funds you need without getting hit with a mortgage penalty. Now, if you're closer to the end of your mortgage term and there's a low penalty to break the mortgage, then refinance would be the way to go. So it really all depends on where you are in your term and what the penalty is or isn't to achieve the funds that you need.
So now what about second mortgages? When would you propose that as a good choice for accessing your home equity?
So a HELOC is usually approved by major financial institutions, trust companies, or credit unions. Now, with each HELOC product, there are guidelines that the banks and these financial institutions must follow. Not everyone fits within the box of the guidelines to be approved for a HELOC, whether it be a credit score, income requirements, property location. So that's where the second mortgage comes. Most second mortgage approval processes are based on the equity in the home. So we're not going to say your credit score is low, so you can't access the equity, or you're not making enough income. Most lenders will find some medium of how to get you the funds you need without jumping through a lot of hoops.
I see. Okay, great. So they all three of them have their pros and cons. It really just depends on your specific situation, and that's where you come in.
That's the idea. That's where the mortgage broker comes in.
So I want to talk a little bit about bridge loans. Could you maybe give us a short introduction to what a bridge loan is?
Yeah, of course. So a bridge loan is just short-term mortgage financing. It's when you need to obtain a mortgage to purchase a home, and you just don't have the liquidity or the funds in the bank to accommodate a second purchase while still having your principal residence. So it's just a bridge from one house to the other. So a perfect example is you own a home, you haven't sold it yet, but you see a property you want to buy and move into that property before selling your own. You need a bridge. You need funds for a short-term period of time that will help you acquire that purchase. And then after that, you can sell your home without any worry, knowing that you've accomplished your purchase. So it's just bridge to a new purchase.
So then I would imagine in a seller's market like we have right now, when things are moving fast, do they become particularly important?
Bridge loan is important in most markets. So what happens is, especially in a seller's market, it's all about opportunity for the buyer and seller. So a home purchase has many moving parts. You have the buyer that has one set of needs and the seller that has one set of needs. Sometimes it's very hard to align the closing dates of the sale and the purchase. So therefore, the bridge loan serves a purpose. If you're not able to align your purchase dates, you can still purchase the property and have the adequate financing to do so until your home is sold.
And then are there any real risks or disadvantages with using a bridge loan?
Well, the risk is if your home doesn't sell, at some point you're going to have two mortgages. And if you're not in a good financial situation, you may have to sell your home at a reduced price in order to pay out your existing first mortgage to afford the second mortgage. So there are risks. The pros are, if you're obtaining a bridge loan from a major financial institution, the cost of borrowing is fairly low. The negative side to that, if you do not qualify for a bridge loan with a major financial institution, the cost of the bridge loan can be fairly high, but they do serve their purposes in today's market.
So the risks are really just if they don't end up serving their intended purpose. As long as you get to the other side of the bridge,
that's the idea. That's the idea.
All good.
You said it. It's a bridge. You start from one side, get to the other, and that's the aim.
Great. So thank you so much for joining us today, Dave. We really, really appreciate it.
Thank you for the invite. I really appreciate for being a part of providing solutions. All right. Thank you. Take care.
Take care.